Hey guys, today's Sunday, the 13th of March, and just my usual video just to end the week and talk about what's happening in the coming weeks. Now, this one's going to be a little bit different, I guess, or not really actually, but I'll still go through the usual. But I'll try and aim to do one video a day for this week, maybe next, just a short one, because there's a lot going on in the markets, and I think this week is going to be the be all end all week that we could see some big reactions in the market. Now, if you look at the economic calendar, there's quite a lot of stuff going on. Okay, pretty much every day. You've got actually, I'll go back. Supposed to be this week. You've got a lot of Aussie data and New Zealand data this week, and some speeches by the RBA. So that's something to keep an eye on. You've got Japanese data and US retail figures on Tuesday night. Mostly US data this week, so it's going to be very critical to see how this all pans out. Now, I don't trade fundamentals and I don't really take much note of these numbers, right? I'm more concerned about how the market reacts, okay? So just to be clear on that. And then Thursday being the big day, right? Thursday morning, our time, Thursday morning, our time. Would be the US federal interest rate decision. So that's going to be critical. I think they're going to hold it, but they have kind of hinted that they're going to raise it. Now, I don't. If they raise that, it's going to cause a lot of problems, right? Done deal for. That would be the most stupid decision they will do if they have to raise the interest rates, right? They should have done this a long time ago. They're choosing to do it the wrong time, basically. So. Their justification is that the economy is going well and they don't see any problems with raising it. But, this is the problem. Anyone that's in the investment world or the trading world knows that it's not okay, right? The general population that aren't aware of all this stuff thinks everything is fine, right? Because they're just listening to whatever the media says. But, this is going to be interesting, right? If they raise the interest rates, then we're looking at, this is going to collapse all the markets, not immediately, but just give me 1 second. Just need to put my charger in, but it's not going to collapse all the markets straight away, but it's going to send a signal to most investors that this is not sustainable. So a lot of companies are going to be in default as well. So we'll just have to see how it goes. But I've mentioned a few times in my past videos that timing is more important than price. Okay, so what I mean by that is, although projections say that the target of a particular stock or something will be at this price, it has to kind of do that within a certain given time frame, right? If it doesn't, then usually time will win. Okay, price. It's just the way it is. At the moment, we've got the markets right at the tops really. So it'll be interesting to see what the first few days of the trading day will be. How far the market will go. I expect a turn, and I expect a bit of a big turn too. So I'd be really careful of entering any positions, long or short. The thing is, the institutions know how people think, right? They know your psychology. They know people will look to go long or look to go short, right? And because of that, they will whip you out. They will play a lot of psychological games, right, on the market. Now, a lot of people will think this is nonsense, but that's the way it is. It happens all the time. And they'll try to scare out as many people as they can, right? And then they'll make the real move, okay? So be careful of that. Don't think that you can just go in there, just put some money in there, and then it's going to be a win. It doesn't work like that, okay? It's not as easy as that. So Thursday you've got, and then following on from that, you've got a lot of other data. GDP is going to be, pound is going to be interesting to watch, especially with the potential euro exit soon. So that's going to be an important one to watch. Now, Canada is really interesting because Canada is literally in more than just a recession. They're in a complete breakdown from what I've been reading. I could be wrong. But their currency is completely getting molested. So this will be interesting to see what happens, because the oil prices. Canada's really big exporter in oil as well. So the low oil prices is hurting them as well. So they're in collapse mode. So And I'm surprised no one in the media is really covering any of this, right? Like, there's a lot of countries around the world that are collapsing, right? Obviously, the oil-producing countries are collapsing. The other countries that are not oil-producing countries are collapsing for a different reason. Okay, um, so that's that there. Like I said, look at it. You can find this on the Google search. You can find it anywhere really. So have a look and see what's there that might be important for you. Now, the S&P 500. Now, I've got sell signals on all of these at the moment. The S&P's pretty much been a sell signal for the last probably week or so, but the thing is, it's been kind of being held up by the Nasdaq, okay, and IWM, two leading market indicators, right? So generally, these two indexes tend to lead the market, right? And so far with the Nasdaq, we've kind of been in this kind of bullish consolidation pattern right here, right? So we're expecting a breakout. But the S&P and the other indexes aren't doing this yet. They're kind of already in reverse, kind of, but they haven't completely reversed yet. And this kind of tells me that we might see another move in the market, right? Once the Nasdaq moves, then the S&P moves, right? So then the question is going to become, well, how high is the Nasdaq going to go? I don't see it going up much more, but I couldn't be wrong, okay? But it's clearly putting in a bullish pattern, right? So we expect to see a move to the upside, and then maybe some more consolidation, and then another move, or we'll roll over. We don't know, right? Just be careful on that one. Same thing with the IWM, the Russell Index 2000. So it's also put in some kind of a bullish consolidation pattern as well. So same thing as the Nasdaq. These markets tend to trade pretty closely. So we've got the breakout. We'll most likely get a retracement, and then we'll get a push up from there. So that's that. Now, but the S&P, from what I remember, it's done the same thing as well. It's basically following the Nasdaq. Okay, so just remember that. So whenever the Nasdaq moves, you want to keep an eye on that one. It gives you a bit of a heads up. Look, I just want to be clear with you guys that this is not a signal service. Okay. So I'm not here to give you trade ideas. I mean, not trade ideas. I'm not here to give you, trade alerts like when to enter a stock, when to exit, when to take profit. I'm not here for that. I'm not doing. This is not what I'm here to do. This is more like just an educational kind of video, and just to give you an idea of what I'm looking at and what others might be looking at too, right? And where I'll give you targets, but I won't tell you specific targets, right? It's signal service isn't really my thing. I don't believe in them. And it's really non-productive, right? So I wouldn't want to give you tell you, buy here, sell there, and it's you might, even if you become rich out of it, to me it's not satisfying, it's not rewarding. Okay, I'd rather kind of show you how this is done, and then that way you can kind of apply it. It's just more beneficial, and yeah, that's just how I like to do it. I don't believe in there's no such thing as what should I call it? A free ride, okay? Everything requires some level of work. And I'm not in the business to, even if someone gave me $1 million and wanted me to invest that for them, and I was pretty sure that I could double it in a short time, I still wouldn't do it because I just don't believe in money being given out that easily, okay? But yeah, we are looking at some big drops. Okay, now the important thing to remember is it doesn't matter if everyone knows the market's going to tank, right? Everyone knows that, right? Even my mum knows that, right? We know that it's going to be going down big time, right? But this is where you're going to be careful, right? If you're going to take a short, the market knows this, right? The market is designed to hurt people, right? It's not supposed to make it easy for you. So you're going to see moves like this, right? You're going to see moves down, and all of a sudden you're all happy. You might jump in, and then all of a sudden it just whips back up there. And these are big whips, right? These aren't going to be small little retracements. These are going to be big whips. So you can get caught out, and then you'll whip back up, and you'll be like, oh shit, we're going to get out of the trade, and you get out of the trade, and then it's going to go back down again. It's going to be a lot of this up and down stuff, right? And these are going to be big moves. It's not going to be small moves. So you're going to be really careful, right? The market's just not going to go down like this, right? It just doesn't happen like that. And even if it did happen like that, right, I wouldn't be surprised if you all of a sudden you see the market in the next bar would pretty much go back up to where it was again. It happens. It's happened before. And then, so if you enter a trade here, you might find yourself all of a sudden, where you invested $1,000, you could be in $100,000 debt, right? Because you got to remember that CFDs and leveraged instruments, the losses are unlimited. Okay, so just be wary of that. Gold. Just briefly on gold. Gold is really interesting. I expect to see breakout soon, and we could be seeing. I don't know how high this could go, but I know that this year I think we're going to break the highs this year, previous highs. But the same thing with the gold market. You'll see them; it'll go up and down, up and down, up and down like that. So that's just how the markets trade. Nothing goes up in a straight line. But what you're going to see is the interesting thing about gold is, gold's had a pretty good run the last couple of weeks, and it's not a normal run. It's completely run in broken structure, right? So this is telling us that we're going to see a potential trend change. Okay, so what we might see is some kind of pullback down here and then a resumption of the trend, or we could just see this keep going up, or we can see this keep going down, right? We don't know yet. The point is here is that. I'm trying to make here is that you haven't heard anyone on the news talk about this. They haven't talked about gold's stunning rise, right? And the importance of it. But they talk about the stock market, right? They blab on about the stock market, how, the stock market's rallying for the last 10 days. This is all good. Everything's going to be okay. But the fact is, even that the stock market's rallying on no fundamentals. It's just, there's no reason why it should be rallying, right? Even if rally, I don't care, as long as I'm in the ride and it rallies. But what I'm saying is, there is nothing good to come out of a rally in the stock market at the moment. Gold rallying is a good news because it tells you that, people are starting to look at gold as being real money. People are seriously taking it seriously, that we might need to look at gold as a safe haven. So that's telling you a lot, but the media doesn't cover that at all. So, but what will happen is that once gold retraces, as it should retrace. You're going to start to see them talk about gold and start bagging gold and how everyone's getting out of gold, but they're really feeding you false information. So you'd be wary. I've been saying this for 2 years, guys, that we're going to see gold go up, right? I've been right all along, and a lot of people are getting too caught up in the whole thing about whether you're always right, you're always wrong. The truth is, the chart. I'm just reading off the chart, right? This is just reading off the chart. The chart's telling me that this is going to go up or down, right? That's all it is. And anyone who puts in the time and effort to learn this stuff will get the same thing too. So don't get too caught up in whether someone is right or wrong, right? Because if you're not in the trade, right, and you miss out on an opportunity, but you're still getting caught up in who's right or wrong, then you're the loser, not me, right? You guys are the losers, right? You've just missed an opportunity. I posted 3 stocks last year and I said, watch these ones. They all go up high. They went up a lot higher than I thought they will. But still, there were 300% winners, isn't there, right? There was one that was 200%, one was a bit over 300%, and the other one was just under 100%, I think. But people could have taken that, and so not here to give you. I'll give you the tips, as in I'll tell you what I might be looking at, but I won't tell you what prices. I won't be spending more time on that. But there's a lot of opportunity in this market if you're going to put in the time and effort for it. Okay. Aussie dollar. Now, Aussie dollar is interesting as well. So now, if you saw my last video, I said that I mentioned that 75, 76 line level area there. It was a level that I've been watching for the last 6 months, and I said that when we were around here, I said that we wanted to kind of test this level before we go down. Like I wouldn't be too comfortable if it didn't test this level. It has to test it. It never got there, right? It kind of got close. It did have that run up there, and then it just flat and just went down again, right? And I thought, oh well, maybe I'm wrong, right? I'm just wrong. That's okay. That's no problem. And then we've got this big reversal since then, and it's gone back up, and it's rallied all the way here, and it's right at the sweet level that I've been looking for a short. Now, I've taken a small position on this already, but I might look at loading on another position for another move down, okay? The reason why I was so focused on this level was because We didn't really test it, right? We broke through it, right? We broke through it and just kept going down, but we haven't retested, right? The market likes to retest previous structure before it makes its next move, and that's what it's finally done. So um, I guess you could say that I was right and wrong. I was wrong in terms of time, but I was right in terms of the price or the level. But this is the thing you got to remember: it does not matter if I'm wrong. Even if I'm wrong, even if I wrong 3 trades in a row or 10 trades in a row, it doesn't matter. The point is that statistically, when this happens, right, when the market has had a deep dive like this, it's in its consolidation mode, and it rallies back into structure. Like there's a high percentage of the time it will reverse, right? There are times where it just breaks right through it and then you keep going up. That happens, but the percentages don't lie. They tell me that most of the time this will be 9 times out of 10 or 8 times out of 10, it's a winning trade. So don't get caught up in the right and the wrong crap, all right? Just, it does not matter. Like at the end of the day, if I'm wrong, I know how much I'll lose, right? I know how much I've risked for the trade. If I win, I know that I make 3-4 times more than what I risked. Okay? So it's all about risk reward. Even if your win rate to loss rate is 70, even if you win 30% of your trades and lose 70%, you can still be in profit just by applying risk reward. Okay, so it does not matter. I actually have more losing trades than winning trades lately, anyway. So yeah, so there you go. So that's Aussie dollar. I'll probably do another video on kind of like market correlation and how can you use correlation to as another way to identify reversals, right? And I've been talking about this one before, which is pound Aussie is another one that inversely trades against the Aussie dollar. So this is also giving me a potential reversal as well. Like we had this bearish pattern and then it kind of dropped. Now when I see these patterns, I'm looking for a reversal, right? So we're looking at a potential reversal around these levels here, and then we'll probably be shooting up much higher than this. So initial targets will be around this level here, right? Your stops would go around probably below here, just below. So your risk reward on this one is very, very good. You've got to take this one. These ones are real. You don't get many trades where you got that kind of risk reward, right? So you're looking at initial target being there, right? Your stops would go at about here. So you're risking, that's a 1 to 5 almost risk reward. If you want to be conservative, you can look for a stops down there, right? Now, I probably wouldn't do that, but some people might want to do that themselves. There is still uncertainty in the pound pairs, so with the Greek, with the exit from the euro potentially. So there is volatility still there. So I wouldn't want to risk too much. Just leave it there. If you get stopped out, you can always re-enter. But at least initial targets at least up here. But I think we could see much higher down the track. So that's that. Gold, oil. Oil's kind of had that rally, but now we're looking at reversal. I'm looking at potential sell signals around this level. It's kind of gone back down, retested structure. So I'm looking for an entry around this level here for a short. And I still think we're going to see a lot more downside in oil along with the stock market. So as the stock market goes down, oil goes down too. So initially I was looking at 23 being the bottom, but I've kind of put that as a question mark for now. Just be cautious on that. I think this week is the start of what we're going to see as being the melt up. So be very cautious, be very careful. And yeah, just don't. I'll give you these tips, but don't just go in there blind. There's market's not supposed to be easy to make money. So, and I'll give you an idea of this. The other day I made, and I'll tell you, like I want to sound like I'm bragging, but sometimes it gives people perspective when you give them more like numbers, right? The other day I made like about 30 grand on one day. It wasn't many trades, about 30 grand. The day before that was about 9 grand. And day after that, I was kind of in a bit of a loss, maybe about 4 grand. The point I'm trying to make is that if you know all this stuff in terms of how it all works, and that you've got some strategies that are proven to be profitable, and you apply good money management, some risk reward to it, and look for high probability setups. In a market like this where there's so many wild swings, you can make a lot of money. And to be honest with you, it didn't really require much money to begin with, right? There is a bit of luck as well to go with that, of course, but the most important thing is really following a plan, okay? So you need to have a plan, right? What a plan, whether it's detailed or not, you have to have some plan in terms of how you're going to manage the trade, okay? But there, I'll leave it at that. Like I said, I'll try and do a video once every day, a short one at least, and then we'll just go from there. Okay, see you guys. Take care.